1st, 2012, Wednesday morning, and grain markets all higher here this morning. We expect that to carry through to the opening here of the open outcry at 9:30. But some of the things that are happening is the euro currency is stronger here this morning. The dollar down sharply, and the corn market and grain market seem to be following the trend of what happens in the euro currency is how the grains react. So that's certainly giving us some support here this morning. Some of the things that might be causing this is the hope that starting a new month, we'll see some money inflow into the commodity markets. We also had good news out of China last night. Their PMI data came out positive. It was better than what the trade thought. They were looking for about 49%. It came out at 50.5, so that was a plus. However, some of the negative news that keeps circulating here every day, that one day it's considered bullish, one day bearish, and today must be friendly. The dragging on of the Greek debt swap negotiations, still no results there, and continues to go on where it is likely in the less time that we have before their next payment to get this solved is running short. So that seems to be an off and on again thing. The other news, several of the Portuguese banks were downgraded in their ratings by S&P yesterday, so that should not be friendly, but again, the euro currency is stronger here this morning. Other news, weather in South America, it's getting to be out of season basically, because they have gotten rain in Argentina. There's more rain on the way. The weather has opened up in northern Brazil where they can get the harvest underway there. So things are looking up for the producers in that area, and that's should bring more grain on the market once that grain gets moved to the ports and export business gets to be more normal. So the weather bulls are looking around the world trying to find a place where they can find something bullish, and they've decided that Eastern Europe, Ukraine, Russia, wheat growing areas, winter crops are under stress, saying reports that there may be as much as 35% of the wheat in Ukraine that's been damaged by winter kill. Growing wheat myself and having that experience, it's really hard to tell when the wheat crop is in dormancy to find what kind of damage you might have. So we're maybe ahead of the ball there, and need to wait a little bit until we actually get some growth or some coming out of dormancy to tell what kind of crop we've got. Other things, the Russians are talking about putting a tariff on exports again. That has supported the wheat market, and however, not really a surprise that they would do that, but if they do it, I think, and the talk of it is causing some short covering in wheat, causing the wheat market to come out of this downtrend, and I think once and if they do make that announcement, it might be one of those things where you buy the rumor and sell the facts. So keep in touch with Allendale Research on that, and we'll try to keep you informed. Again, looking for export business here in the U.S. No real announcements on a daily basis. 8 o'clock this morning is when the USDA usually announces the daily reports. Watch that closely and stay tuned to Allendale for that information. In the cattle trade, not much trade yet in the cash market. We heard that there was some cattle traded yesterday at 196 dressed weight in the Nebraska area, a few thousand head, nothing major there. Most of the asking prices are 200 to 202. No real packer interest showing their hand as of yet. Again, the cutout values are deep in the red, near that $100 mark, and it's been that way for several weeks now. So that's definitely causing packers to slow down production. And slowing down production, you'd expect that the product prices would firm up and help improve that margin problem that they've got. So that has not been the case. Yesterday, cutout values in choice up 35 cents, select down 60 cents. Not anything significant to help change that margin, red margin that they have. So we've got to monitor that closely. We need to see some more better sales at the retail counter. I think one of the problems and struggles that we're seeing at the retail counter is the prices of beef have increased, and yet the consumer is now getting their credit card bills from the spending for the holidays, realizing we've got to cut back somewhere, and they're cutting back on meat consumption. So this is nothing unusual. It's a seasonal thing. We've got to get through this in order to get the beef prices stronger. Pork complex, a different situation, however. We've got cutout values. They're up 125 yesterday. Technically, in the charts, pork has stabilized and been able to hold together rather well in light of the weak demand for beef, and also we're in a seasonal time frame here where we should see pork prices rally. Stay in touch and monitor the charts very closely and give us an indication of when that timing occurs. So look for some strength in the pork complex over the next few days. The cattle still struggling, and the battle between the cutout values and the lower are unable to strengthen the product is causing some concern there. Tight supplies is still important, and also a winter storm that possibly could be moving through the cattle feeding area in southern plains, southern Kansas, Oklahoma area could definitely stifle some movement there, as they're calling for anywhere from 5 to 10, maybe as high as 14 inches. I know Drew Lerner this morning's forecast has moved the storm a little further to the north, so maybe the brunt of the cattle feeding area won't get hit quite as hard. So things to watch here in the markets, reasons to stay in touch with Allendale's research, reasons to check out the Allendale Research Center, and to subscribe to the Allendale Research Center. So give us a call if you got any problems subscribing online. You can reach us at 800-262-7538. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.